So we're taking a look at the 15-minute intraday chart on the S&P. Obviously, we've had a huge sell-off. You can see the sell signal up here, this yellow blip. This is, again, a 15-minute intraday chart. You see it broke support 1, daily support 1, daily support 2, daily support 3, and touched weekly support in the S&P. Let's look at the QQQ, or the Nasdaq. Here we go. The Nasdaq, the same thing. I would assume the Dow, the same thing. Everything is hitting weekly support. Let's look at the VIX. The VXX is this tracking stock. You can see it skyrocketed today. Take a look at Zoom. Zoom's interesting. It just had earnings. It came out, and you can see the stock was trading at about 326 or so. Yeah, 325, 326 at the close there. The exact close was $325.24 on August 31st. After the bell, they announced, obviously enormous earnings due to the bug out there. And as you can see, we popped up to the open for the next day was, what was that to open? About 439. It was up about over 100 points from 325.25 roughly to $439 at the open. It created this huge gap from 410 to 325. That's almost a 100-point gap. That's a $10,000 move in an option. We waited for this to see today if it was going to retrace back all the way up, and it did not. In fact, right now it is trading at approximately 363. So we closed at, the close today was about 380, 379, and it's currently trading in after hours at about 363. Let's take a look at AMD, some of these other tech high flyers. Let's go to 65-minute chart. You can see what goes up, comes down pretty much right away. Let's look at Apple. Of course, Apple had the stock split. There is a big gap right here, or not a big gap, but it's sitting on top of a gap. We can see right here. This is what's great about using the new AI Deep Trader software. We have it automatically calling these gaps out, so you can see what's basically going on here. So this gap was from somewhere about 96 to about 100, and remember that's times 4, so that's about a 16-point gap in the pre-split world. But as you can see, we're heading down pretty sharply. We've got a really confirming signal here at the top. It looks like the top of the market. This thing went up all the way to 137 something, 137 and change. Wow. So let's see, what is that times 4? It's could be, because that didn't hit 600. Let's see, 137, call it 137 even times 4. Yeah, 548. So it hit almost 550. We were out at 515. We didn't want really any part of that on that Monday when it went up to about 515 the previous week, right in here. So Apple had normalized to the 500 price point, and then just before the split, it just normalized here roughly at a 500 price point. You can see 125 and 25 times 4. Post split is 500. So, and then it just took off for really no other reason than this is the late money coming in. Remember, money comes in as the first is the smart money. That comes into the market, the really smart money, the venture guys, all those guys that are in early that know which companies are in play. Then there's the traders. They can see everything that's going on by volume. If all of a sudden there's 100 million contracts being traded for weeks on end on Zoom, and it's just skyrocketing. I mean, there's, traders can see that. After traders, you got momentum. That's pretty much what I do. I do momentum trading based on algorithms. And then you have the dumb money after that. So the dumb money is it's not really dumb money. It's just money that comes in way late. People read about stuff in the headlines, and they think, oh, it's September, October. I'm going to need more money for juniors college, let's say, and they start dumping money into the market at the end of the year, and that's typically when markets sell off. So let's continue. Let's take a look at Amazon, one of my favorites. A bit of a pricey and more liquid options market, but you can see this thing went all the way up to 34, almost 35.50. I'm sorry, 35.40, 35.50, somewhere in there. Looks like it's 35.45, 35.47. Yeah, it looks like it hit this, it hit about 35.50. The high was 35.52. I stand corrected. We think Amazon, of course, is a good long-term play. It's just that it's got an enormous price-to-earnings ratio, and it's been bolstered. The stock and the company has been bolstered by the coronavirus. So let's take a look at something like Macy's that went up today. This has been kind of shooting up and being sold off and shooting up and being sold off. It's got a cycle of maybe once a month. It kind of hits. What's happening is, first, if you saw in the sell-off in March, everyone came back fast in the Nasdaq pretty much. So Zoom, Amazon, Apple, anything that had to, even Nvidia. Let's take a look at Nvidia. Anything tech, right? And then you saw the S&P come back, and then you saw the sort of laggards, the legacies, the X, the M, the F, Macy's, Ford, U.S. Steel, the companies that have been around forever that are exposed to brick and mortar. I think a lot of business will be shut down after this. I think that obviously things will return in the long run, but maybe we are on the 90th year of the Etruscan cycle. We have the Etruscan cycle, which is every 90 years. The Etruscans ruled Rome and surrounding Italy for 900 years prior to the Romans and everything. So they had this 90-year cycle, which is, if you base it, on a 45-year, half of that, and then 22 and a half years, it's about a generation. So if you look at 1929, you add 90 years, we get to 2019, that big crash. Then if you look at the 11-year cycle, which lines up perfectly, if you look at March, pretty much March 17th, March 15th of 2009, the 11-year cycle, if you add 11 years to 2009, you get to March of 2020, which was the nadir, the bottom of the market. It lined up perfectly. We also look at things like, weekly cycles, monthly cycles, but and annual cycles, like just the annual cycle of the S&P. Even, every trading instructor will tell you that the best time to buy the S&P is usually in February or March. So right now we're looking at Nvidia. It's come down off its lofty highs of, up here at 588. Let's look at AMD. AMD is another one. Yeah, AMD. And AMD is also, that's interesting. It's sitting on not a huge gap, but technically that is a gap. 74 to gapped up from 68 to 74. I remember that. We actually had, I think, one put on there. We thought it was going to sell off at earnings and close this gap. So we took a little bit of a hit on that, but we were very cautious overnight. We don't really trade AMD, so it was just, a small few $100 that we took a hit on, nothing to dent our portfolio. However, if you look at this gap from 69 to roughly really 75, so 74, 75, it's currently trading at 82. So we could have, this could even over the next month go from 82, work its way down to this level of 69, or even down here of 61 or 62 as the market sells off into the end of the year. Let's take a look at Netflix. Again, we're only looking at the first out of the rotation, the Nasdaq, the high-flying stocks. Yeah, again, we had a nice big sell-off here. I mean, this one day, if you look at this one day where it just took off, this looks like it was a, let's see, it might have even been a Monday, last Monday. I'm not sure when exactly it was. It says 826. So basically that was a huge breakout for this, in terms of its, it just sort of dampened it here and just hugely took off. So basically this stock right here of Netflix could, retrace to this level, or it could retrace to, below this level here. This level right here is 510. I mean, it's, these stocks that are $500, $600, $2,000. Let's take a look at our favorite. One of my personal favorites, Mr. Elon Musk and Tesla. Now this, I believe, is just all these Robinhood traders up here at 2,000, 2,200 a share. I mean, you know, it had just traded down to 1,300 a share just recently. So, you know, hence the split. It allows more people to come into the stock, but you know, who knows where this thing could go. I don't really trade. We don't really like to trade this too much. Let's look at let's take a look at gold. A boring asset, but you know, I mean, it was overhyped. Gold was way up here. We already looked at this channel here and here. Yeah, that's about it. It's not too exciting here. Nothing really to report. We're going to take a look at you know, the AI deep trader stuff and see what it flags. It does a more systematic approach towards looking at buy and sell signals, highs and lows, support and resistance, and gaps, which are actually sort of the more predictive forms of indicators out there. So, all right, everyone, have a great day. You know, remember, you can always buy put protection, write covered calls, or put in stops on your portfolio to prevent a steep sell-off. We had a very steep rise from the nadir, or the bottom of mid-March, through basically last week and this week, especially in stocks like Tesla and Apple. And, you know, the market just might be taking some profits. It's been a rough year for everyone, and I wouldn't be surprised if this market sold off another 10 or 20%. All right, take care. Have a great one.